video in our Basic Accounting 101 series. In this series, we'll be exploring the fundamentals of accounting, starting with what is accounting and why it's important. Throughout this series, we'll cover everything from financial reports to key accounting concepts tailored for accounting students, aspiring virtual bookkeepers, and small business owners. By the way, I'm Nanette Bicayo, CPA, a virtual bookkeeper and accountant.
We'll be tackling Basic Accounting 101 to help us understand the accounting reports. Of course, the preparation of accounting reports, financial reports. Let's go. So, what is accounting? Accounting is the systematic process of recording, analyzing, and summarizing financial transactions. It's the language of businesses that helps stakeholders while making informed decisions. So, because of this accounting, the stakeholders were able to make decisions according to the financial reports, according to the results of the financial reports. So it includes recording, since we have to record the transactions in different accounting systems, or if you want to go with manual, so you can do. And of course, before recording, we have to analyze the transactions. And then after the recording, analyzation, this involves reconciliation of accounts. So we'll do generation of reports. So the financial transactions will be generated, and we have now the financial reports, which called profit and loss, balance sheet, statement of changes in equity, cash flow. So that will be our topic next. So the financial, because of accounting, the accounting is of course the language of business that helps stakeholders make informed decisions. So without accounting, of course, the stakeholders will experience difficulties in making decisions. So let's proceed. So the purpose of accounting. The primary purpose of accounting is to provide financial information that is useful for decision making, whether you're running a business, managing personal finances, or studying accounting. So the primary purpose, as I mentioned earlier, is to this financial information to be useful for decision making. Whether you're running a business, decision making for your business, for the future of your business, managing personal finances. Yes, of course, you can do accounting with your personal finances. You can record all the revenue that you receive, the expenses, so you will get net income or loss at the end of the month or the year if you're managing your personal finances. And of course, studying accounting, if you're a student, you will understand more the financial information. Okay, so here are the steps in the accounting cycle. So let's start with identifying transactions. So all the transactions that will be recorded in manual or in ledger, in books, you have to, or in the different accounting systems, first you have to identify the transactions, whether you're selling, whether you're receiving an income or paying, and of course, if receiving an income, where the where the income came from, and the expenses, where to pay, how much. Yeah, that's identifying the transactions. And then recording the transactions. So we will now record the transactions in books and in different accounting software. So this is the next step. And then posting to ledger accounts. If you're using manually, as in recording in the books of accounts, especially in the Philippines, if you're studying, you have different books of accounts. So after the recording of transactions, you have to record in the ledger accounts. So you have to summarize in the ledger accounts. In accounting software, we don't have this step anymore, because every time that we record, the transactions will be generated. They will be included in the different accounting system, in the reports of the different accounting system. So next, preparing a trial balance. So if you're a student, you will prepare a trial balance. And then if you're already a business owner, this is already not in the accounting software anymore, but some of the accounting firms are still preparing this one, and of course the businesses are still preparing this one. So even if you're already using different accounting software, and then especially on year end, this is still needed. But monthly, no need. And then making adjusting entries. Of course, we have to make adjusting entries at the end of the year. And then preparing financial statements. By the way, making adjusting entries, correction can be made also in monthly, but most of the time this is prepared annually. And then preparing financial statements. So preparing financial statements, when preparing financial statements, you have to first, of course, we're done with this one, and upon making adjusting entries, we already done with the reconciliation, so we prepare already the financial statements. So this includes the profit and loss, balance sheet, cash flows, and changes in equity. And then closing entry. So this is year end. This is only done year end entry.
In this video, we introduce you to the basics of accounting and the accounting cycle, setting the foundation for the rest of the series. In our next video, we'll dive into the profit and loss, one of the most important financial reports you need to understand. If you found this video helpful, please give it a thumbs up and don't forget to subscribe to our channel so you won't miss the next video in our series. Feel free to comment below if you have any questions about the topic or other topics you'd like us to cover. Thank you for watching!